This is the Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. Well, Eric, we finally have something to be excited about in the metals markets. We had a big week in gold and silver. Gold, first off, back above 1,200, back above the 1,220 level, which has served as resistance for a long time, and perhaps even more importantly, has placed a weekly close here above its 200-day moving average, which was right around 1221. Gold closed the day on Friday right around 1225, a weekly close above its 200-day. And silver perhaps even more impressive. Silver spiking well over $1 back through 17 the second half of the week and closing quite a bit north of its 200-day moving average, which is around 1720. With a close of around 1750 here on Friday. So certainly some positive things to be excited about in gold and silver here this week. Really, it's no coincidence that the dollar is rolling over. Dollar closed right around 93 and a quarter here for the week and appears headed back towards right around the 88 to 90 level. Eric, what's your take?
Yeah, when we look at this whole month, there's a lot of interesting things that have happened. We've had at least two periods where the long bonds for the German bond and for the Federal Reserve's, or the Treasury's long bond, 10-year and 30-year, have seen some kind of freak-out periods, and it's been written about extensively on Zero Hedge, and we can include a couple of links to that just for perspective's sake when we do the write-up on this show. And I think that those are the initial tremors of people kind of second-guessing what the heck's going on with this whole quest of the normalization process of the Federal Reserve's quest to return to normal interest rates and regain their quote-unquote credibility and all of that stuff. And underneath those dynamics, you have what I suspect are people beginning to price in the realities of a higher probability of a GREXIT. I mean, for months, we've been talking about the fact that the end game probably is GREXIT, but the conventional financial world that manages 95% of the money out in the universe hasn't really been of that opinion. They believe that somehow, some way, the ECB and the Troika and Greece is going to pull a rabbit out of the hat, and that the political reason for keeping the euro zone safer and together would be so compelling that the powers that be would figure out one way or another to save it. But I mean, even now we have interests within the German policy establishment lobbying Merkel to figure out contingency plans and to even, in fact, make the case that maybe the eurozone would be better off with Greece just exiting and washing her hands with it. This is kind of a major shift in the whole discussion in the background going on amongst policymakers that is different for this month versus every month that we can look back since the latest flare-up with Greece. So I believe that part of what we're seeing in gold and part of what we see with the bond market spasms is related in part to the recognition that at some point people who manage money have got to start pricing in the realities of sovereign debt positions being so stinky at this point. So there's that. There's also the whole dynamic going on with China and the SDR basket and the probability of China declaring their gold holdings in part later this summer. That's most likely starting to be priced in as well, and we discussed that extensively on many shows recently. And the overall just systemic risk of the financial system as the global economy gives lots of indication that it's rolling over is in triplicate. These three main dynamics, I believe, are behind what we see in the revitalized push to purchase gold and silver. And it was interesting too. I believe it was Monday, and if not, it was Friday, and my memory fails me, but CNBC had a really rare long interview with an options trader on the CME who was making the argument that on a risk-reward basis, gold was very attractive, that given all of the factors that are in its fundamental failure, and given how far that it has fallen, and that we've seen the November lows of last year hold, that on a risk-reward basis, it was a compelling trade. And for that kind of sentiment to even be aired on CNBC is astonishing in and of itself. But it speaks to what I've described a couple of times in our shows this year, where the paper boys on COMEX do tend to jump in and get motivated. And, we've seen a really large decline in the open interest in gold. It was really bottomed out in that October-November period, and then we hit the 22nd January relative high, and that was in that month there was another $500 million added to the GLD as but one other indication of the sentiment of the paper traders chasing paper gold. And I think we're seeing that right now. This week is seeing COMEX paper jockeys coming in, speculators coming in, and we'll see that in the COT report. When we look at the COT over the weekend and maybe next week, if we want to cover it, you'll probably see a big jump in speculative interest. So that all said describes the initial push as to what's underneath the gold market and the silver market right now. And the only caution I would put out is that there's been a historical pattern where the cartel will tend to not try to cap very aggressively when the paper chasers are in the market very aggressively, because it's kind of like trying to stop a speeding train. They look for periods where things calm down a bit, and then thereafter they try to attack. And we may be setting up for a period like that next week, and I'm not making this forecast because I think, frankly, it could go either way. We're today closing with, or setting up at least, to close gold and silver above yesterday's relative price and corresponding time trace of the movement of gold and silver, which is a very bullish thing. I mean, we've been doing that for days now. It's very, very rare to see follow-through. Usually the cartel will try to cap and push prices down so that there isn't any kind of follow-through, because the biggest thing that motivates Western-based traders is higher prices. When they see a trend, they just go berserk and they chase the trend. And likewise, as I was speaking about before, that's partially when the cartel does back off, when the trend chasers are aggressive in the market, as we've seen this week, particularly 2 days ago on Wednesday. So all of that being said, it's just a note of caution. Next week we would be typically pricing in the options expiration that's going to come later this month, and you'd see the cartel step up and start being more active in terms of managing prices, and that could happen next week, and people need to be aware of that, because many people may be really excited about the trading that has happened this week and want to jump in with both feet, and it might be wise to just do a couple of toes as opposed to jumping in with both feet, because the cartel historically has operated where they would seek to cap prices next week if their pattern of operations continues. But we'll see, because the fundamentals are all here for higher prices. There's a growing understanding of all the various things that are going around the world that can trigger higher prices, including a much lower appreciation for the Fed and the ECB having the back of bond holders, and the spasms that we saw in the bond market earlier this month speak to that. There were early earthquake tremors as to what may be in store for the summer and fall.
Right, and I certainly agree that historically that is the type of action we've seen in capping by the cartel, but they certainly won't have their winds at their backs this time, Eric, with the dollar. I mean, let's face it, the dollar is rolling over, has rolled over, and typically when you have a major currency, when it reverses and changes directions, that's not a 1 or 2 day thing. So we'll see how it plays out, but that's certainly promising for gold and silver. And again, with the weekly close above the 200-day moving average, I certainly personally wouldn't be surprised to see gold first challenge 1240 next week, and silver set its sights on about 1850. So it sets up a promising couple of weeks ahead, in my opinion. But again, a bit of caution, as Eric notes. Typically, from a historical perspective, the cartel pattern is once a bit of the upside momentum is exhausted, to try to drop the hammer. So
yeah, and even if it did drop the hammer and you lose maybe 5% or whatever on gold, 7, 8, 9, whatever percent on silver, the pattern that you're describing with the dollar, I think, is valid and going to be operative going for the next couple of months overall. And this pattern with the precious metals rising throughout this whole summer, I think, is going to surprise people. So if we do lose ground just because the cartel caps and maintains things going through the next options expiration, so be it. That's something we've seen so many times, I can't even remember how many times it's happened in the last 14, 15 years. But the reality is that despite what a lot of naysayers think, that this bull market stage began in November. It has not violated the November lows, and I think we're going to continue on. So if we do even see a minor capping effort next week, it's going to be just a footnote along the way.
And on a physical market side, really the interesting development over the past week, and especially the second half of the week, is the sudden return of big money to the market on the physical side. I've mentioned in previous shows that really over the past probably 4 to 6 to 8 weeks, it's really been the small average Joe retail investor who continues to invest in the metals, and big money had largely disappeared, at least from what we see at ST Bullion and are talking with the primary dealers and our contacts across the industry. But that changed in a pretty big way this week, with big money returning in a level we haven't seen really, I'd say, since probably the last week of October, first week of November last year, when gold was dropping towards 1130 and silver was reaching its lows at the same time. So we'll keep an eye on that. We haven't yet seen a big retail shortage develop in the metals, but it certainly wouldn't take much from what we are hearing as far across the industry, as far as what inventory levels look like and production times. So we'll see.
What's the premium situation looking like? And also, I'm curious, when you say big money, have you seen any first-time buyers among the people who you'd classify as big money?
Yes, we are seeing a lot of first-time buyers. Premiums haven't moved too much yet, and it kind of testifies to what I was just saying. We really haven't seen a shortage develop yet, certainly anything like we saw in 2013 or 2008. So people are taking advantage of the low premiums and likely reading the same technical charts that we're talking about here, beginning to be excited about gold and silver. But yeah, we've had quite a few first-time customers and people putting their very first physical purchase in silver and buying 5,000 or 10,000 ounces. Be a nice problem to have, wouldn't it, Eric?
Yeah. I was reflecting on our conversation with Rick Rule that we had on our last show, and what he was noting as far as the big money in China being willing to plop down serious investment capital for longer-term commodity plays is very interesting. We've seen the Baltic Dry Index roll over to the new lows earlier in the year. The containerized shipping index look really just signaling major problems economically. But it is interesting because simultaneous to all of this, we've seen China talk a lot about the possibility of doing a very aggressive QE of their own, which would put an afterburner into the commodity sector. And though China has a lot of excess capacity and malinvestment, and particularly you see that in their real estate space, it would fit with the overall pattern of the prices in the commodity sector, stabilizing. And we've even seen a pretty decent stabilization in the price of oil in the last 2 months. So that's another factor that could very well help precious metals in the next month and a half or so if we are to see some significant news out of China, and I suspect that we are going to, in fact, see that. So keep an eye on that kind of stuff.
We'll wrap this week's show there, Eric. Again, a little bit of cautious optimism and excitement returning to the gold and silver markets this week, with both gold and silver making a weekly close above all the critical numbers, the 50-day, 100-day, and 200-day moving averages, as well as in gold, that 1220 level, which has proved a significant resistance and support level over the last 6 months. So we'll have some cautious optimism as we watch the metals markets into early next week. For the Doc and Eric Dubin, thanks for tuning in to this week's SD Weekly Metals and Markets.